What happens to your property value when the people who fund the state's economy decide to leave? Well, we might be about to find out. On February 16th, 2026, the Washington Senate passed Senate Bill 6346, a 9.9% tax on income over $1 million. While supporters call it fairness, the data tells a much darker story. The exodus is already happening. As a working professional in the state, I'm seeing a success penalty that is triggering a massive wealth shift out of the Northwest. Today, we're breaking down the IRS data showing a net loss in tax revenue, the February 24th House Finance Showdown, and why this tax on the rich could be a death sentence for the Washington housing market. But let's look at the evidence. The 2025 Washington Office of Financial Management report shows that while our population hit 8.1 million, our growth rate has slowed to just 1%, the lowest since 2013, excluding the pandemic. But here's the part they won't tell you. The IRS migration data now shows Washington is losing roughly 2 taxpayers every single hour to other states. We are trading high-earning, established residents for younger, lower-income workers. In fact, in 2025, net migration accounted for 78% of our growth, but that number is down by 7,500 people from the prior year. We are witnessing a quiet drain of the tax base, and the 9.9% tax is the final straw for many. Washington's miracle is built on tech equity, but we are compounding the pressure. Remember, we already have a 7% capital gains tax, which jumped to 9.9% for gains over 1 million as of January 1st, 2026. For an Amazon or Microsoft engineer whose restricted stock units vest in a single year, this isn't a wealth tax, it's a one-time life event tax. When the risk takers realize that a decade of work will be taxed at nearly 10% on top of federal rates, they don't just complain, they move. And when the talent leaves, the innovation that drives the local economy and perhaps our home values leaves with it. This hits local business hardest. Most Washington firms are pass-through entities. If a local contractor in King County clears $1.2 million in profit to buy new trucks or hire 10 people, the state is now hovering to take $100,000 of that growth capital. This line of thought is why King County domestic migration has been negative since 2018. While international arrivals keep the total population up, the domestic pro-business class is moving to the suburbs or out of state entirely. We are seeing a hollowing out of the local economy. The market is already reacting. In early 2026, luxury inventory in Bellevue is up as high net worth individuals pre-exit due to the existing environment and before the 2028 implementation of this income tax. The Henderson connection is real. Nevada saw a massive spike in inbound moves in 2025 precisely because they have zero income tax. If the top 0.1% of our taxpayers, who provide billions in revenue, decide to leave, who fills the gap? We do. When income tax revenue fails to meet the state's aggressive spending, they will look to the only thing that can't move, your real estate. Expect property tax levy lid lifts to become the new norm as the state tries to recover from the self-inflicted exodus. Or perhaps the income tax threshold is just lowered repeatedly with a changing definition of what constitutes rich. Is it possible that any landowner could be considered rich at some point, at least for purposes of assessing an income tax? I think so. We are just days away from the March 12th deadline, which is when the current state legislative session ends. The House Finance hearing on February 24th is the moment of truth. If this bill passes, the no income tax brand that built this state is dead. This isn't just about the rich, it's about the stability of your neighborhood. Subscribe to Washington State Intelligence as we track the migration data and the legislative votes that are reshaping the Northwest. Stay informed, stay ahead, because in Washington, the roof is getting a lot heavier.